Hello, 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 and welcome to week 18. We are building a kingdom business in just 52 weeks, 1 year. Yes, we're going to do it. And this is week 18. So we are moving right along and it's soon to be at a rapid fire pace because we are in the second quarter and it is time to make some movement. Now, our topic this week. Hello, Dominionaires. Hello, Kingdom Builders. Great to have you again for another week. Hopefully, you've done your homework because, as you see, every week we go higher and higher. Well, this week we're talking about money as a ministry tool. Yes, how about that? Money is actually a ministry tool. Our scripture, which is in Deuteronomy chapter 8 and the 18th verse says, but remember the Lord our God, for it is He who gives you the ability to produce wealth, and so confirms His covenant, which He swore to your ancestors as it is today. There is a mindset, a theology even, of money that is quietly operating in most faith communities, and it is causing more damage to the kingdom entrepreneurs than almost anything else I've encountered in my work. It sounds like this: money is dangerous, wanting it is suspect. Having a lot of it is probably means that you made some compromises somewhere. The safest spiritual posture is to need just enough and not to get too attached to the rest. Now, that theology, I get it. It feels humble. It presents itself as faith over materialism, and even contentment over ambition and simplicity. We want to keep life simple. I'm not going to have too much over accumulation. Understand? But it is not humility. It is a distortion. And when it operates unchallenged in the life of a dominionaire or kingdom builder, it produces founders and entrepreneurs and leaders who underprice their work, under-resource their missions, and refuse to build financial systems because managing money feels too worldly, and then wonder why they cannot sustain the impact that they were called to create. In our scripture, Deuteronomy chapter 8 and the 18th verse, it doesn't say, remember the Lord our God, who will make sure you have just enough. It says, it is He, the Lord our God, who gives you the ability to produce wealth. The ability is a gift. The production is the actual assignment. And the purpose is for the confirmation of His covenant. It's larger than your personal comfort. It's not about having our personal conveniences. Money in the hands of a kingdom entrepreneur is not the goal. It is the tool. And like every tool, it is only as useful as your ability to handle it well. Now, I want to spend a little time on this because let's talk about it in the spiritual and then we'll move into the practical. Because the practical doesn't really hold if we don't have our spiritual theology underneath it correct. Our scripture connects the ability to produce wealth to the confirmation of covenant. That is a significant link. It means that the wealth generated through your business is not incidental to your spiritual life. It is, in the context of kingdom, an expression of it. It's an expression of your spiritual life. God gives you the ability, you, the Builder exercises that ability. The result confirms something about the faithfulness of both. So, this should reframe everything about how you're thinking about earning money, spending money, saving money, giving money, and investing money, especially in the context of business. If the ability to produce wealth is a covenant gift, then the neglect of that ability is a covenant obedience issue. The founder, the leader, the entrepreneur who refuses to learn financial management because numbers feel unspiritual, that leader is not being humble. They're actually being irresponsible with their gift. The founder who underprices because charging appropriately feels greedy is actually not being generous. They are literally undermining the very tool God gave them to fund the mission. And the founder who builds financial systems, prices with integrity, manages the margin. Yes, we deal with margins and multiplies the resources that God has given you. That founder is doing exactly what the covenant describes. They are confirming it, they are demonstrating it, they are proving it true through the operation of their business. And that's the theological foundation that everything then follows. This is about covenant. So now let's apply it to the natural because theology without application is literally just you just heard something and you heard the word and you're not doing the word. Most early stage founders do not have a financial system. So take a breath. And most simply replicate what they do in their household into their business. We want to address that because you probably have a bank account and a general sense of the balance, whether it's going up or down. That's not a financial system. That is a guess. And building a kingdom enterprise on financial guesses is not stewardship. It is gambling with covenant resources. Yes, building a kingdom business on financial guesses is not stewardship. That is actually gambling with covenant resources. Now, what is a financial system? A financial system has typically four components. And I don't mean it eventually has four components. I mean it starts out with four components from the very first sale. The first is operating funds, or for most of you, it's going to be your startup funds. And this is an account that you're going to set up, which you pay the cost for running the business. You're going to pay for the tools, for the equipment, for the software, the people who are working with you, for the marketing, whatever is required to deliver your product or service. You're going to have an operating account to pay for the expenses to operate. So every business expense is paid from here. Nothing, not your personal expenses. Don't mix the two. So that's why your business has an operating account. The second is a tax reserve. And this, I have to say, is the single most common financial crisis that I see in early stage businesses and sometimes, established businesses, is that there's going to be a tax bill that arrives when the founder, the business owner, has already spent that money that really wasn't theirs to keep. You have to set aside a portion of your income into the business, like at least 25%, 25 to 30%. You set that aside the moment that you get it, just like your tithes. You take the tithes right off the top. You set aside the money for your taxes right at the top. Treat it as untouchable because when the tax season comes, and here in America, it always comes, that reserve is already there and you're not scrambling to pay your tax bill. And so it doesn't have to become a crisis every spring. The third type of account or a component of a financial system is owner compensation. Yes, you have to deliberately pay yourself and on schedule in an amount that reflects a real understanding of what your time and leadership is worth, not whatever is left over after you pay your bills, because your salary, your compensation is a bill. So you want to have it documented. You want to have a consistent, we call it a draw or salary, what you're going to pay yourself. This is your salary. You want to have it documented and you want to set up for it to be automated because you'll find out as you're running your business is that you'll go pay everything else and not pay yourself, and now we have a different problem. So we want to protect your personal financial health and support the correct tax classification of your business entity, and we'll get into that later. All of this prevents that that slow nagging resentment that will start to build when you realize you're working, and you don't have any personal money. And it will prevent you from mixing your personal expenses in with your business expenses because you have set aside your personal money, what comes to you personally, what you will report as your personal income on your taxes, and it will prevent there being a financial mess later on. So this is an account that from the beginning, you want to build in the habit that this is how you're operating your business. So that's the third component of a financial system. The fourth one is giving and mission. So if you're here, your business has a kingdom purpose, and you're building it um, to have a mission, to have outreach, to have an impact, and to build the kingdom. So you want to build giving into your structure as soon as possible, and not as an afterthought from surplus, but actually as a line item from your revenue. So decide what that percentage is going to be before you start to get the money, because then you might change your mind. But try to decide, I'm going to give 1% of my revenue towards mission, whatever it is. Decide that up front and then automate it so that it's already webbed into your business structure, that generosity is a part of your financial stewardship strategy. So establish that at the beginning so that your business continues to be generous as seasons change. Because once you have that habit, then you won't have to look for it. And then you won't be so easy to get rid of it when you run into times of strain. So those four accounts, those four categories, think about it now. More clarity is is the biggest the biggest gift that you can give your business, because when you're in the early stages, You want to build the system that you're going to grow with. And so I want you to develop all of these four habits now so that it will be your core discipline later. Now, one thing I do want to discuss, and I want to be kind of upfront about it because it does sit at the intersection of the spiritual and the practical in a way that's directly relevant to where you are building. How you handle money is one of the most observable testimonies of your business. How you handle money is a testimony of your business. So, not your mission statement, although you should have one, not your social media content. And yes, you have to have social media content in this day and age. It's really hard to operate without it, even if you're a brick and mortar. Not your brand identity or your values, your corporate cultural language. None of that, although you should have all of that. The most important thing is the way you handle money, how you pay people, if you pay them on time, whether your invoices are clear, whether you honor your financial commitments. Are you a good payer? Some people are bad payers. They just don't like to pay bills. Don't let that be you, because how you handle money tells everyone who interacts with you and your business something deeply true about whether the values you proclaim are the values you actually practice. So we want to get our money straight. I have watched kingdom branded businesses lose clients, lose partners, lose investors, lose employees, not because the ministry was a failure or even a spiritual collapse, but mainly because the money was mishandled. A contractor was paid late or not paid at all, without communication, uh, invoices that don't match what was initially agreed upon, tax liabilities that create a lien that surface when doing due diligence. We're going to do a search. We're going to do a title search. We're going to do a lien search. And so these things will become discovered. And so you could lose out on an investor or a partner because of the way you manage money. So these are not dramatic failures. They're quiet ones. It's those little habits that we don't have from the beginning, and it's really hard to make new ones. Not impossible, because nothing's impossible, but it is more difficult if you have bad habits and you have to undo them. These issues that I've seen have always been preventable, which is what breaks your heart. And if you practice this discipline, your business will operate consistently and you will have the financial reputation you need to do bigger and better things. So the business that handles money with integrity, meaning you pay on time, you price honestly, you keep clean records, you meet your tax obligations. This is building that gives the structure that is necessary rather than hoping that you have more than enough money to cover all of these things. You want to have a business that's credible, and credibility that's sustained over time through disciplined habits is the most durable form of a kingdom business that is actually a witness in the marketplace that you are a kingdom kid. So I need that to sink in. I'm aware that for some of you, what I have described is probably an elevation or an upgrade from where you currently are, but that's fine. I want you to deal with it honestly And this isn't a reason to feel like you can't do it or you're gonna feel behind. No, that's not it. This is actually a reason to change, to start now, building in these habits and this discipline now. So you don't need a CFO. You don't need a complex accounting system. You don't even need to understand every nuance of business finance before you build this system that I've described now. You need those four accounts and the discipline to use them correctly. You do need a bookkeeping habit. And this is what I do once a week. I set aside at least an hour to just deal with the finances. I categorize every transaction and I reconcile what came in against what went out just once a week. I have a pricing structure that is grounded in what I say my services are and what my company represents against the actual cost of what I deliver. And so it doesn't have to feel socially acceptable. It has to be spiritually reasonable. So I want you to think about your money mindset, and I need you to have a kingdom mindset that is large enough to hold the assignment that is on your life. God has given you this business as an assignment. So the one who understands wealth as a covenant tool, financial management then become is stewardship. It's a stewardship discipline. And generous giving is a part of that structural commitment rather than it being an emotional response. It is the way you operate because you are a kingdom business builder and you're taking care of God's kingdom. You are a financial distribution center for the kingdom. So you have to manage yourself as such. So the ability to produce wealth was given to you on purpose. Now, how you manage it is how you answer to that gift. All right. So this week, I know that's a lot, but money answers all things. So we want to get our money straight, and money is a ministry tool. So this week, this is our reflection on this week. We're going to ask ourselves, what is my money mindset? What is the theology of, of money that's actually operating in my life right now? And is it one that I would choose if I was to examine it intentionally? Not how you would describe it if you're asked. No, we all know how to give the right answer, but the one that would be revealed if we did an audit. How you price your work, how you pay your bills, how you manage your business finances. If we took a hard look at that, how do you think you're doing? Do you think that you're generating significant wealth and that that's your gift and responsibility to do? Or are you still harboring this quiet belief that money is dangerous, that wanting enough is suspicious, that financial ambition is incompatible with spiritual integrity? Deal with it. And then hold it up against what the word says and ask whether, am I thinking spiritually or am I thinking based on what I've learned in community? Do a business check. Secondly, I want you to ask yourself or do an inventory of your business financial system. Do you have these different accounts that I've discussed? Or do you just have a general sense of what you have in your accounts? And be honest, there's some people who can kind of run a tab in their head. I've seen that go horribly wrong. But do you recognize that it's your responsibility to know where your money came from, how much you have, and where it needs to go? Be honest. You need those four components. You need a operating funds, you need a tax reserve. Please listen to me on that. You need to pay yourself appropriately, and you're a kingdom business. You have impact and outreach and mission to achieve. So are you currently structured and operating that way in your business now? And which ones do you have? Maybe you have one or two of them. Which one don't you have? And then pick the one that's missing and work on that one this week. Yes, every week we have to do a little bit of something. So, not next month, but this week. And for those of you who've already started your business and organization, and you already have some things established, take some time and make sure you have everything that needs to be established. And for those of you who are still in your planning stage, build this into your startup plan now from day one. Go in knowing that this is how you're going to manage things. And so that way you start out on the right foot. The system that protects your business tomorrow is the system that you build today. So the ability to produce wealth was given to you as a covenant tool, and handle it like it matters, because the mission that it funds and the lives that it's meant to positively impact are depending on it. Now, I want to know, I ask you every week what's going on. I want to know, what's your current financial system? What does it look like? And which piece are you working on building this week? Hit the reply button, let me know. And there's no judgment. That's why we're here. So no comparisons, but we want to have an honest inventory and take the one next step that will help us to get our business financial systems built. All right. So now I'm going to leave you a couple of legal tips as your executive counsel. This is the executive counsel corner. So we're going to shift gears just a little bit, but it's all tied in. Tip number one: kingdom financial systems require physical separation, not just a mental categories, but actually open. And I harp on this because it is the biggest culprit in a business. You have to have a minimum of two dedicated business accounts. One is the operating account for the day-to-day business expenses, and the other one is that tax reserve account where you put 25 to 30% of every deposit is transferred immediately. As soon as you get that money, it automatically goes into this account, and most banks will allow you to set up your accounts this way so that you have an automatic transfer, so that this reserve, especially this tax reserve, happens without you having to make a choice to do it every week. I have to tell you, this is the single most structural habit that eliminates the most common financial crisis that impact businesses. I don't care if it's early stage or worse, you've been operating this way for a while, it a crisis is imminent. So we want to make sure that we have the tax money ready for us when the tax bills arrive. Now, most bank accounts can be opened in under 30 minutes once you get your EIN and your business entity formation documents. It's easy breezy. So if you haven't done this, and you might not be at the stage of opening an account, but I would say if you already know your name, if you've already um, established the legal entity, then go ahead and open up your business account, because now you can start putting in your startup funds so that you have it when you're ready to launch and need to start paying for different things. Just something to think about. The other thing about money and understanding that money is a tool, and specifically for us, it's a ministry tool, is that business credit is a tool that I have to say most kingdom entrepreneurs underutilize, are not in a position to take advantage of it. Not because they can't access it, but because they haven't begun building business credit. And your business credit profile is separate from your personal credit, and it's built through your business entity's financial activity. So, a business bank account, business credit card used for business expenses and paid in full monthly, vendor accounts reported to the business credit bureaus. All of these things build a strong business credit profile. And this will expand your capacity to hire, your capacity to invest in other products, other services, expand your business, and it increases your capacity to let your business do things, and you don't have to do it personally. But um, here is a tip that most people don't recognize. Yes, you can get a business loan, but unless you're buying a business that already has um, uh, cash flow, most businesses need a personal guarantee until your business gets to um, a certain stage. So at the beginning, your personal credit is going to be what helps establish your business credit. But then once you start operating your business will build its own credit profile. And so the best way to build your business's own credit profile is to make sure business and personal are separate. So I want you to begin building that profile now, because you may need it to do a line of credit, which I strongly encourage businesses to do. And you want to get your line of credit before you need a line of credit. And so that's another thing. So think about that. You might need to purchase some equipment. And so you want to have your business credit to be uh, in a position to be able to get credit. All right. So this is something that you want to establish from day one, and it's the um, financial infrastructure that if you start out right on day one, year one, when you're ready to do bigger and better things, and say year 3 and 4 and 5, you'll have things established in a way that you'll be able to do that. All right. So money is a ministry tool. It is a covenant tool. So take responsibility for it. Next week, we're going to talk about the discipline of deliverables. Yep. Why keeping your word is a covenant obligation. And so that's what we'll dig into next week. Make sure you do your homework this week. Establish those 4 components of your business financial system, and you will be off and running. All right. Hit me up in the replies. Let me know what's going on, and we'll talk to you next week.